Welcome to our weekly Forex forecast. This is Jay Norris. As always, we need to remind you trading Forex is a risky endeavor and not suitable for all investors. I've written a couple of books on trading which were published by McGraw-Hill and which serve as the textbooks for our courses. I'm also the Director of Education at Trading University. Getting to the charts, first market we'll take a look at is the Aussie US dollar. Aussie US dollar, there's no other way to look at it. This is a sturdy looking market, good looking market. You can see it's up on that primary, secondary, and day-to-day pattern. So pretty good looking market. Even you drop down a 4 hour, that intraday pattern is just really tight, really strong, very shallow retracements. So this is a good looking market, and I think it's one that if you get just a little bit higher, if you go for those stops, if this market gets up there and can elect the potential buy stops above that September high there, it really sets the stage for a test of the 2012 highs here, just above 108. So good looking market. I think the story in the Aussie is that China didn't slow down, that China had what everyone saw is a more modest slowdown than they had anticipated, which is to say that China held steady, and that was supportive of the Aussie. The Aussies also enjoy pretty high credit rating. They get pretty high marks from institutional traders, sovereign funds for performance of the Reserve Bank of Australia also, and let's face it, they have that big carry trade too. So a lot going on for this pair, and in the relative world of currency trading and interest rates, you get a pretty good rate down below still, especially when you look at that margin rate in a Forex account where you're looking at 50 to 1. So Aussie dollar looking pretty good. Can't rule out the potential to blow stops above 106 and test the 2012 highs just above 108. Next market, Euro US dollar. You finally had a correction for this, I guess that 4-week rally there. It was a pretty steady runner there, a pretty steady move higher. Technically, it gave a sell signal yesterday for us in our method as far as long-term trade. It's in line with that long-term pattern. You had to change of direction. I personally would sit that one out. I'm mindful that the secondary pattern's up and that day-to-day pattern would be up too. I'd rather see it. I'd rather give it a little chance and see if it can switch that day-to-day. Then I'd rather wait and sell a rally following a breakdown in the day-to-day rather than get short here. I'm almost thinking that if these other markets, that the Australian dollar, for example, that we just showed you, likewise the U.S. stock market, we'll get to that, if they continue to firm, they're probably going to lift this market higher. Same with similar, if the yen continues to weaken, it will be supportive of this market. So while this market, Europe has its problems, sure, Mario Draghi himself said no comment when asked pretty poignant questions about the debt situation in Spain and even before that Italy. Boy, when a central banker says no comment, yeah, that's cause for concern, and it was good for about 250 pips, I guess, down because you saw the market sell off. On the other hand, the other markets aren't looking so bad. The global economy is looking not as bad as we thought, just a quarter or two ago. So I think all things being equal, things aren't looking too bad, and these other markets potentially continue to prop this euro up. In fact, this is another guy where I think if you blew stops, if you elected the stops above the August highs, you got a real shot at a new high for 2012 in the euro too. At the very least, if you can climb above those levels, get a couple of daily closes above them, it sets you up for perhaps a move on that 2012 high in the first quarter of next year. So, what would get me to change my mind? If you shifted this day-to-day lower, then I'd be interested in selling a rally. However, to me, it's just the threat lies in those stops above the summer highs as far as I see it from here. Next market would be the pound dollar. Pound dollar, I see the same thing. Yeah, there is a sell signal on the daily chart right here. You're looking at it. In this case, it's a counter trend sell signal in the euro. It would have been a trend if you're a long-term position trader. It was actually a trend trade in the euro that I'm not enamored with it this close to into December, this close to the year end. But here's another sell signal, albeit a counter trend sell signal that I'm just not interested in. I'm just thinking that I'd rather focus on a potential buy setup here and pass on that sell signal there. We'll see. Even if it goes down to that level, then you can make some money on the short side. However, I'd rather be patient. just me, I'm more interested in a potential buy setup in this area than concentrating on the sell setup here. And it's pretty simple if you look at the chart. The primary pattern's up, the secondary pattern's up. Those long-term patterns are up. Yes, the day-to-day is down. Wouldn't mind seeing a dip though. I'd rather take a bullish micro shift in line with these higher time frame patterns than try to go after the short side here. So pound similar to the euro. Here's the big dog right now, dollar yen. The big story is going to be if this market continues to be the alpha market. And maybe it looks a little bit tired there, but it's still pretty tough. I look at a 4-hour chart and look at how it closed today, the end of the week here. Set itself up. It doesn't look half bad heading into the new week. You had that big wick on the U.S. number. Obviously, you had a very positive number in line with the trend. You got all the way up to the November highs. It's natural. Traders are naturally inclined to take money off the table. You got great news on your long positions. Take some off. But here's what's impressive to me. Yeah, it came off on that profit taking, but it started going right back long. They just went right back on the long side, started clawing higher. Here's an hourly chart of it. Started clawing right back higher. That's a tough market. So we'll have to see. The big story in the first quarter is going to be, does the dollar yen continue to be the alpha market as Aussie yen is too? Or does the U.S. stock market usurp that role and continue and go back to being the leader it was in years past on the upside? We'll have to see. Speaking of leadership in the market, here's an alpha market right here, Aussie yen. We love this market. Look at that. Nice steady eddy on the upside. Just every day get a higher high, higher low, higher close. We think that you could see 90 plus by year end. At the very least, again, it sets itself up for the first quarter for a big move. But we think 90 even, and this is one where we're not shy about calling for all-time highs eventually. So it's a good-looking market. You could see there you have all three of those important patterns aligned. So we like Aussie yen on the upside. The big question is this the guy? Is this the alpha market that can actually lift the other markets higher? And to me, I'd have to say yes so far. Here's the previous reigning champion alpha market. I think that here's the U.S. stock market. I actually think Aussie yen's kind of usurped this market as the new alpha. Stock's looking good. Day-to-day still down, granted, but it wouldn't take much to shift that, and you could shift that in a hurry. A day-to-day pattern, you can shift that pattern on a 4-hour chart. So we're definitely watching this guy. And if you get the day-to-day shift bullish, that's in line with the primary and secondary. Does this guy come back on the alpha side? I don't know if you'll have time between here and year end to go for those new highs, but you certainly open the door for it, and really it sets itself up in the first quarter for a test of the all-time highs in the stock market. If we go back to a weekly chart, you can see the 07 high. That's within striking distance on the weekly, and that may be within striking distance sets itself up for a rally in the first quarter of the year. You tend to have a pretty good seasonal at the beginning of that year. Thank you so much for attending. Once again, my name is Jay Norris. I'm a Director of Education at trading-u.com. Here's our website if you want to see more of what's going on. Come to trading-u.com. Click on Market Commentary, and you'll find this video, among others. You'll also find very timely information, forecasts, articles about the markets in both our blogs, the Seeking Alpha blog and the Trading U blog. Thank you so much, and we'll catch you next time.